Hello again, fellow BeachBum traders. Welcome to part one of our weekly trading game plan for April 4th through April 8th. We'll talk about how you can make money trading commodities. With the increased focus on commodities due to the Russian war in Ukraine, the supply chain disruptions due to the pandemic, etc., we're seeing a lot more focus on commodities, discussion of oil prices, natural gas prices and supply and demand, now agricultural product, potential shortages, inputs, supply and demand. So we wanted to help you learn how to make money, the various ways for making money trading commodities. So we'll focus on that this week, and hopefully you'll stick around to the end of the video where we'll discuss some potential strategies on how you can make money trading commodities. So let's get started.
Quick pause and introduction of my little boy cat that I'm sure you'll hear in the background throughout this video, as he's very, very boisterous today, as he wants to be famous on the internet and in YouTube. He's the next YouTube star, so I hope you'll bear with me as he appears in several of the videos. And I don't know if you've seen this meme floating around, but
okay, firstly, I'd want to share with you an article, a whole guide on commodities on investing.com, and I'll put the link to this article, this guide, in the description box below. This is a great discussion of what are commodities, how can you trade them, all the various ways. So I won't go into it in detail, but I just wanted to hit some of the highlights and then discuss, commodity trading and how you can make money. So you can see, what is a commodity? It's a basic good. They highlight precious metals, energy, agricultural products, etc. So some of the key takeaways, here's their categories, and I'm going to throw another category in there in a minute. But they talk about metals, energy, livestock, meats, agricultural. And we're going to talk about agricultural in our strategy at the end of the video today. And it's, a good way to diversify. Again, currently there's a lot of focus on commodities. We'll talk about, the recent focuses on nickel and lithium as inputs to electric vehicle batteries, EV batteries. We'll also talk about some other inputs and opportunities in those areas. They talk about the risk because of weather, natural disasters. Now we have wars, pandemics, etc. Anything that disrupts these supply chains will affect the commodity prices. Another thing I wanted to point out here, we'll talk about this as well in our strategy, is commodities tend to be a good hedge against inflation. Many of them are priced in U.S. dollars, and we can talk about the effect of the U.S. dollar on the prices. And then you can see there's a number of ways you can trade and invest in commodities. There's futures, contracts, options, and ETFs, as well as, if we scroll down here later, we'll see, there's ways to pick individual companies, stocks that participate in the production, distribution, etc. of commodities. So again, if we scroll down here, the CME Chicago is a big focus of commodity trading. And again, a main focus on commodity, and the way to think about it and making money is supply and demand. If the supply gets impacted, the price goes up. If the demand increases, the price goes up. If the supply increases, the price goes down. If the demand decreases, the price goes down. So it's very supply-demand driven. One of the reasons I like trading commodities is they tend to be very cyclical. And as primarily a swing trader, these things are great ways to make money because this supply and demand curve cycles over time. And again, if you have patience and can wait for that supply and demand curve to cycle, there's an easy way. I think it's a relatively easy way to make money because eventually it will cycle. So again, you can see metals, energy. They talk about also, you can focus on the companies that help to produce those commodities. They talk about futures, etc. Again, there's a ton of information here, and I won't go over all of it. We're going to talk about using ETFs and what they call ETNs or notes. You'll see in my previous videos, we do a lot of our trading in retirement funds. So if we want to short a commodity, we need to find an ETF that allows us to short that commodity, because we can't short individual stocks in retirement funds. So these ETFs are a great way. I don't like mutual funds, so we're not going to talk about those very much. And then the bottom line is there's a variety of different ways you could trade commodities, and we'll talk about various strategies. Another commodity that they don't list here, at least one that I want to talk about, is semiconductors. I view semiconductors as a commodity as well, because they follow this supply-demand curve. So again, I'll leave the link to this article. You can read it in detail at your leisure, but I hope this all helps. And again, we'll talk about more strategies after we review some of the market analysis and where we are at and where the futures are pointing. And then in part 2, if you come back for part 2, tomorrow we'll talk about, okay, which individual ETFs, stocks, etc. are we picking to make money with commodities, and other opportunities that we're able to find. Okay, if we start our market analysis with how the markets ended up on Friday, April 1st, I'm on the home page of FinViz. You can find our affiliate link for FinViz in the description box below, as well as on our homepage, etc., which is beachbumtrading.com, bum without the U. So again, if we look at where the markets ended up on Friday, April 1st, we can see all of the indices ended up, but it was due to primarily the spike at the very end of the day. I'll probably do a future video on what's called the market on close orders and how you can potentially play that if you're like a day trader, etc., short-term trader. On Thursday, we saw a spike down at the last minute, and on Friday, we saw a spike up at the last minute, which I would presume is market on close orders that were hit right at the last minute. So under the covers, we can still see there were balance of new highs and new lows. We had more advancers. We now have more above the 50-day SMA, but we still have a majority below the 200-day SMA. We can also see a very slightly bullish indicator on FinViz. So, and then if we scroll down and look at the recent news, the reason that they're citing in the news is the positive March job reports. We'll talk about that in a minute. Jobs report, okay, bond yields, jobs report, okay, so, and hiring. So the news is pointing to the upturn in the markets due to the jobs report. We can see oil declined down under $100. We'll see this in the futures. And we'll see natural gas is still kind of spiking up. And I find that a little bit strange, but we'll talk about, again, these are commodities, and that's our focus for this week. We see gold has declined now below 2,000, and again, we'll talk about gold, silver, etc. And later, we'll also talk about the inversion in the treasury bond yield curves and what that means. So stick around, and we'll talk about all this in more detail. Okay, if we take a real quick look at each of the indices on a weekly chart in FinViz, we're going to see they're all testing these crossover points of their 50 and 200-day moving averages, the SMAs. Again, we're going to see this in all of them. So the SPY tried to push up, got rejected. Again, it's sitting right at that crossover point. So as we've discussed for several weeks now, there's still a lot of indecision. It may try to break out, but it may be rolling over and continuing to decline. So, from a mindset, until we see a definitive breakout and staying above that average and trending back up, we still have to, I believe, consider that we're in a declining bearish market. So, and keep our mindset focused on that. Again, the Qs, the Nasdaq, very similarly, it tried to break out, failed, and came back below its moving average. And again, we see this in all the indices. Dow, same way, tried to break, failed, came back down. And then the Russell's is considerably weaker. It again, tried to break out of its moving average, failed. And then if we take a look at the VIX has been steadily declining. We had a little bit of volatility towards the end of the week, but now it is sitting below 20. As of this moment, it's at 1963. So we're hoping and expecting a further decline in the VIX unless there's some kind of global events that causes a spike. Also, we'll talk about the FOMC meeting notes coming out this week that may cause some volatility. But otherwise, if we get a decline to the 18 or 16 level before the next FOMC meeting, then we would be looking at longing the VIX, and we'll show that in the futures as well. Okay, let's take a quick look at the sectors and industries. This is the Groups tab in FinViz. I've got sectors selected. We have a separate video on how to go into this in more detail and then how to find stocks and hot industries, etc. I'll put the link to that video in the description box, so I won't go into that in detail. We can see from a one-day, the winners on Friday were basic materials, utilities, and real estate. For the week, again, utilities, real estate, and then we had the consumer defensive. See the losers from Friday is technology and industrials. Same for the week. Industrials were down. Energy was mixed throughout the week. Same with technology. If we start to zoom out even further, the month, again, it's just April 1st, so it's going to be very similar, but the winners are utilities, energy, basic materials. So again, we've got two major commodities and then a user of commodities, right? So if we then select an industry, this gives us a real good view of which commodities to focus on. And again, from the daily perspective, we see oil, coal, silver, gold, oil, coal, copper, etc. are the top performers for the day. And again, for the week, it's going to be very similar. Real estate, again, one could think of real estate as a commodity, right? Because it's a supply-demand driven, it's sensitive to lumber, sensitive to other supplies. So again, then we see solar, oil, etc. Agricultural inputs, okay. So this is an area that I'm going to want to talk about in the strategy piece. Again, I'll leave that to the strategy, but I'm starting to focus on a mega trend that I see in the agricultural products area. So then if we flip over to countries, I want to see just very briefly what are the top performing countries. And we saw a China-Hong Kong pop on Friday due to them saying that the regulators may let the U.S. auditors look at the books for Chinese companies. And as you'll see, we'll talk about, we went long on Yang, which is the short on China, and I'll talk about why and my thesis on and potential catalyst, both in part one, maybe a little bit, but probably more in part two. So weak performance, we can see some South American, Australia, etc. And again, because of the what I perceive as a retraction and globalization and disruptions and the war and all that, we're looking at, okay, what potential other countries might be of interest. So we hope this all helps, and then we'll continue our game plan. Okay, let's talk about some of the economic data that came out last week and what we can expect for next week. And as a note, please see that I'm now trying to post this economic data as it comes out in our Surf the Market Reports channel in our Discord. So again, as this market data gets released, I will get it from typically the economic calendar from investing.com. You'll see the links that it posted in there, and I'll post that data as it comes out in the Surf the Markets channel in our community Discord. You can find links to our Discord in the About page on our YouTube channel, off of our homepage, beachbumtrading.com, etc. So again, you can keep an eye on that as it's released. I will also update the daily economic data as it gets released from investing.com and CNBC, etc. So if we jump over to investing.com, and I will talk about just some of the highlights. On Tuesday, we got a kind of a negative consumer confidence, but we got a positive jobs JOLTS report. So again, the jobs numbers that you'll see from last week were all pretty positive. Then on Thursday, the OPEC meeting, they, again, no change to their plan, to their production plan. They're still increasing production monthly, but they're not accelerating that production plan despite Biden trying to push them to do so. So Biden turned around and is releasing 1 million barrels of oil per day from the Strategic Petroleum Reserves, the SPR, for up to 180 days. And we saw that oil did decline down below $100. So again, we're talking commodities, and these are both affecting the supply of commodities. We also had some demand reductions due to shutdowns in China. So again, we've got increasing supply and decreasing demand, and therefore the oil prices went down, and which is what we expect from a commodity cycle. So we can talk about that in more detail as well. And then we also got jobs claims. Initial jobs claims were a little bit higher, and personal spending was a little bit lower. So these are negative for the economy, and we can talk about, the economic outlook in more detail. And then we saw PMI, which is the producer inflation index, was slightly higher than forecast. So again, we've still got producer inflation. And on Friday, we got the March jobs reports data, and you saw all the news that was received positively. Manufacturing payrolls were better than forecast. It's kind of interesting because they received it positively, but non-farm payrolls was a little bit worse than forecast. So then we also see construction spending was less. ISM new orders were less. PMI was a little less, so that inflation was a positive view, and manufacturing prices were higher. So again, we're still getting hot inflation numbers. The jobs data was received positively, but it's not super strong. So. And then again, if you go to investing.com, this economic calendar, I like this because you can very quickly scroll through and see the positive and negative, so we see the JOLTS, etc. So now let's look at what we can expect for next week. Okay, if we very quickly flip over to the economic data calendar for next week, the 4th through the 8th, we can see the highlights. It's a pretty typical week of economic data. The highlights being that on Wednesday, the FOMC meeting notes are coming out, and I heard that they're expected to include discussions of the FOMC's plans for quantitative tightening. This may cause some volatility. If this plan for quantitative tightening is tighter than what the market expects, we might see a downturn. We might see, obviously, in bonds, if they're selling faster, bond prices will probably drop because the selling pressure. We also, again, might see a decline in the market. We might see more volatility. So definitely keep an ear on what comes out of those FOMC meeting minutes on 2 o'clock on Wednesday. Then on Thursday, we get jobless claims data, as is common. And again, this may give us a better picture as to how the economy is doing, which will then feed into the FOMC's next decision. which is not until May. So the next FOMC meeting is May 3rd and 4th. There is no April meeting. So again, for interest rate hikes and the actual implementation of this quantitative tightening plan, we expect that to be implemented in their decision in May. And we'll talk about more what we expect to come out of that, but what that means for us in terms of strategy is from now until May, except for those meeting notes, is we might have a lull in the interest rate and quantitative tightening impacts. Okay, if we take a real quick look at the data on the market screen on Webull, and again, you can find our affiliate link for Webull on the About page on our YouTube channel, on our homepage, etc. You can see Webull is still doing their increased promotion of offering 5 free stocks if you open an account, and up to $3,000 when you fund your account. So again, this is a special promotion. I don't know how long this is going to last. They usually do 2 or more free stocks, but again, if you're not using Webull, you can get 5 free stocks now by opening your Webull account. You'll see we really like Webull. Webull and FinViz is what we typically use at investing.com for our market analysis on a weekly basis for our game plan. So, and again, we have a whole other video on how to use this markets tab to do further analysis, so I won't go into that. I just want to very quickly look at the histogram. We can see a nice distribution of advancers, but there's, again, the advance is small. If we look at the inflow in the exchanges, we're still seeing the NASDAQ is not getting as much inflow as the NYSE. So industrials, tech is still not getting the inflow, and so that's not an area that we would want to focus on. Then if we go to the bottom, I want to look at the best performing industries for a weekly basis. So I'm going to select 5 days. I want to look at the week. And we can see, okay, water, utilities. We expect utilities from what we saw in the groups tab in FinViz as well. Financials, fintech has not been doing well. Even though we have rising interest rates, we have this inverted yield curve, which is not good for financials. So beverages, this is a consumer defensive. This is an interesting sector too, and this may be something we want to think about, is how can we take advantage of that. Transports is another area. You know, we were talking about commodities, and commodities have to be transported, and there's some opportunities potentially in that. I don't really like the dry shippers because of their stock performance, so I tend to stay away from those. But we talked about railroads. Money Mitch, Story Investors, was talking about railroads. I thought that's a good idea. I also heard there's a strike in the Canadian railroads, so again, the supply is diminished, it's going to drive prices up. Real estate, again, the REITs were running up. So now if we go back and look at some of the ETFs, again, this will show us some of the commodities as well. We can see the indices. Again, this was pointing up on Friday just at the last minute, but it's indecisive which direction they're going to head. If we look at the industries, healthcare was very positive, energy, communications, utilities. Again, this is all Friday data. Basic materials, that's been a trend. You can see technology still not doing very well. We saw consumer defensive is very positive, real estate positive, energy, and financial is not. So those are the areas we want to focus on. And then here's our commodities, so we can see, okay, what were the top commodities? As we expect, precious metals, aluminum, livestock, and again, this is agriculture, and we're going to talk more about that. And then we see nickel, that's an EV battery input. And okay, so the same. And then coffee was positive, a broad commodity. broad commodities, etc. So then bonds, see investment grade, long term. Okay, so again, the long end of the curve is positive, the short end of the curve is mostly negative. And so I hope that helps. And now let's look at the futures and talk about our strategy. Okay, now if we look at the Futures tab in FinViz, and this is where I typically find the opportunities in commodities. So when we get to the commodities, I'll point out, this is how I usually spot an opportunity. But just to very quickly look at the indices, we can see they tried to push up, tried to break out, and they all kind of rolled over. So it's, again, still indecisive as to the market. Are they going to make a breakout, or is it going to roll over and decline? We can also see the global markets, and we'll talk about global markets maybe in another week. I would like to start focusing on global markets. We see the decline in the VIX and then kind of a stabilization. Okay, so here we're getting into the commodities. So we've got oil, we've got several categories in the future tabs that tell us what's going on with oil. And again, we can see, it ran up, it pushed up, and now it's declining. So all the oils are showing a decline. So we would expect the oil to decrease. Again, we tend to play, there's a number of ways we can play oil, and I'll point those out in a minute. We tend to use gush and drip, which are based on the oil exploration. They're leverage ETFs on oil exploration, and we are currently long on drip, which means we're short on the oil and gas exploration companies. So we expect and hope for a further decline in oil. Natural gas is, in my opinion, is behaving kind of strangely. We understand that there's a supply decrease due to the cutoff of Russian natural gas, and that we're shipping to Europe. Europe has a high demand, but there is no shortage of supply of natural gas. It just needs to be shifted. So we do expect natural gas to roll over. So we went long on coal, which again is a leverage ETF to short natural gas oil exploration. The long on natural gas, if you want to play that, is called BOIL. And there are a couple other ETFs you can use. So again, we expect over time the seasons are warming. We expect demand to decrease. So there is no real shortage of supply. So in time, we expect this to rectify it. Again, this is how you play commodities. Is over time, if there isn't a real issue, long-term issue with supply or a long-term increase in demand. So in this case, we expect a decrease in demand due to seasonality and rectification of the supply chain issues with the supply, and therefore we would expect prices to decrease. So hopefully that makes sense with these commodities. Again, we see them as great opportunities, being very cyclical. You see, we made money on this irrational decline, and we went long with oil, and then when it spikes up, we go short with coal. And so, we play these cycles over and over and make money. Gold and silver are kind of neutral right now, so there's no strong play. It tends to be bouncing up and down, so there are daily opportunities, but long term, we do expect gold and silver to continue up just because they're a hedge on inflation, store value, etc. But right now there is a strong direction. So then we talk about agricultural products. They've all been high because of the Russian war in Ukraine, and they are a large supplier of wheat, corn, etc. And then also there's an issue that we found out that they use natural gas as an input to fertilizer. Because of the price of natural gas, fertilizer costs are increasing, so anything that requires fertilizer is also increasing. So we can see all these commodities ran up. Unfortunately, I don't have ways to short most of these with ETFs for a retirement account, so there are ETFs to long these, like for live cattle and hogs. You can long it with an ETF called COW, C-O-W, but I don't currently have a way to short it. I would have loved to be able to short that kind of gap up. But again, if you want to short individual stocks, you may have an opportunity there. That's what I'm looking for in these futures, is an irrational gap up or gap down. We saw natural gas when it did this irrational gap down, I saw an opportunity. When I see something like this, major gap up, I'd say, okay, there's an opportunity to short. How do I short that? So again, this is how I find these opportunities. When wheat spiked up, I was looking for a way to short wheat, and look at what that would have done, you know. Now, there are ways to long wheat. There's ETFs to long wheat, but I don't have one to short. So again, this is how I'm using the futures tab to find these irrational gap up, gap downs, irrational run ups, run downs. And then we see the bonds, but again, we expect quantitative tightening, which we expect bond prices to decrease. And then also, you know, last week we started talking about Forex because we could see this you know, correlation between the U.S. dollar and the Japanese yen. There was an opportunity there, but I don't have a way to play Forex, as Webull does not currently support Forex. So I hope this all helps you see how I use this futures tab. I do have another video on how to use this futures tab in detail. So hopefully I'll put the link to that one as well, and hopefully these videos will help you see how to find these opportunities and commodities using the futures tab in FinViz. Okay, very quickly, if we talk about some additional strategies about how you can make money with commodities, etc., and then hopefully you'll come back for part 2 and we'll talk about the individual stocks and ETFs, etc., that we're going to put on our watch list for this week to be able to play these strategies. So we talked about the next FOMC meeting is the 3rd and the 4th, so we don't, other than the release of the notes, which may cause some volatility, we may know more. We don't expect changes in interest rates or definitive plan for quantitative tightening until May. So we talked about how we're playing that. We talked briefly about the bond yield curve inversions, and probably talk about that more in future game plans, possibly individual videos. But for now, I will put this link to a search query that I did in Investopedia that has some good information, various number of articles about, you know, what does this mean, how does this, you'll hear a lot of talk on CNBC, etc., that this is a guide to recession. They'll talk about, you know, does it cause a recession, or is it just an indicator, what's the time frame, etc. So I'd recommend that you read these articles, get familiar with, you know, what does this mean? Does it really mean a recession, or is it just an indicator? What's the time frames? How does the stock market tend to behave in the interim? And again, it's no reason to panic, but it's good to understand the impacts of the bond yield curve inversion. So again, I'll leave this link and you can read these articles, and we'll talk about that further in the future. The one I really want to talk about is I think this is going to be the next mega trend. And before I get into that, let's just talk about the energy commodities. As we talked about in the futures, you know, energy oil has been running up, and there's been predictions of very high oil. But now you see Biden's having to resolve this. And bottom line is, it's an election year. Energy costs drive inflation. So both from a political standpoint and from an FOMC standpoint, they need to solve the energy price problem. Now, how they solve it, how long it takes, I don't know. But in my humble opinion, again, not financial advice, is in my opinion and how we're playing it, we expect energy prices to eventually resolve themselves. And again, this is why we play the cycles in these commodities, is eventually the price is going to come back down. As we saw a couple of years ago, it got irrationally low and then it bounced back up. So that's what we expect for energy. The next one I see, and this, in my opinion, this may be even more important than the energy, is agricultural products, food. People can live without oil. You don't have to drive your car, but you have to eat. So the disruption due to the Russian war in Ukraine, if they miss their planting season, there's going to be a major disruption in wheat, corn, etc., that both Russia and Ukraine export to a number of countries around the world, and that's not something you can replace real quickly because you have to grow it. So I see if this continues, and particularly if they miss their planting season, we're going to see agricultural products prices spike up. And also we're talking about the inputs to those, like fertilizer and the impact on natural gas. So I want to start finding opportunities in these products that haven't already run up, particularly looking at the inputs, looking at the transportation. Let's talk about the whole supply chain for agricultural products and where there are opportunities here. And in part 2, you'll see some stocks I've identified that may have potential opportunities in this area. So let's talk about this further, but I think this is going to be the next trend that we want to capitalize on. And then finally, I just wanted to throw this out. We'll start talking about this for the longer term future. Is I thought it was interesting as Biden's announcement of a health ARPA research project like the defense ARPA. I don't know the details of it right now. It was announced on 3/28. But let's talk about in our Discord and our Facebook group, what do we think will be the impact of this type of ARPA on biotechs, healthcare, medical, etc.? Will it help them out? They've been beaten down severely. Will this help the funding for those companies? So let's talk about that further in the Discord, in the Facebook group, etc. What do you all think? Love to hear your feedback, and again, I'd love to hear your feedback on this whole video, all this information. What do you want to hear more of, less of, etc.? What kind of improvements can we make? Please let us know in the comments to this video, in our Discord, in our Facebook group, etc. And I hope this all helps.
The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch lists, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week.